Hello viewers, in this video I'll be going over natural gas, ETF ticker symbol UNG. Today we're down 4.7% on the 1 hour chart. We were touching oversold RSI. The MACD is now negative. As for the 4 hour chart, we were approaching positive MACD, however overnight and this morning we are back down to negative MACD, and the 4 hour chart is nowhere near oversold RSI, so which is a bit concerning, because we may have more downward pressure. And as for the daily chart, the daily MACD is also pointing down and now is in the negative territory, and we need to see, well, I don't see any convergence in the daily MACD, which is a bit concerning, so it may take time for natural gas to make a reversal in the next coming days. And we do have a substantial sell volume today. And as for support, I do see a possible support, and we have a price concentration back in October 3rd and as well as October 10th and October 23rd at around the price of $19.35. So that is our immediate support if we do head down lower. And as for support, we do see a possible resistance at the 18-day moving average. On Friday, we did not make it to that level, and the 18-day moving average also coincides with the price concentration that dated back to November 11th and November 14th. Since that support is above our current price, that acts as our resistance now. So if we were to move on higher, that price movement is roughly around 6.1% or 6.2% to the upside, and for the downside it is around 1.8% to the downside. So the forecast model is now available in the link below, so do check it out for natural gas. And we do have UGAZ and DGAZ, and if you configure the settings, you will examine the other figures that I do not go over, so do check it out. So again, the link is below. And back to the forecast model, I'll go day by day where natural gas will head to in the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, 7 days out. So which one of these models we should focus on? Ideally the model that is the best match to the current trend right here. And below is the trend that I believe is the best match. This trend dates back to June 5th to August 29th, 2018. So let me point out why these two charts are similar. So what we have in the beginning of the current trend, we average above the middle Bollinger Band, and then we proceeded to reverse and touch the bottom Bollinger Band. After touching the bottom Bollinger Band, we touch the upper Bollinger Band at this instance, and after that we see it dip below the middle Bollinger Band and attempt to revert back to the mean and touch the middle Bollinger Band. So we see those points there, and we start to see a similar pattern in the beginning as well. We see an average above the middle Bollinger Band for several days, and after that we see it reverse, touch the bottom Bollinger Band. After touching up bottom Bollinger Band, we see it touch the upper Bollinger Band. And finally, after touching upper Bollinger Band, we see it revert back to the mean and touch the middle Bollinger Band as well, right towards the end. So one point I do want to note is that at this instance, we did actually touch the middle Bollinger Band, and however here we did not quite touch it at that middle line, so do take note of that. And we do have 1, 2, 3, 4 points. We also have 1, 2, 3, 4 points. So there is reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. And again, the model that we just examined was June 5th to August 29th, 2018. Back then, natural gas was down roughly around 2.5 or 2.4% to the downside. So overall, natural gas may fall a little bit lower, may possibly reach the support level where I indicated on the technical analysis. So again, this forecast model is now in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.